Welcome to the Qatar Economic Forum, powered by Bloomberg. I'm Jumana Bersechi. Over the next half hour, we'll be showing you highlights from the 4th annual forum that took place in Doha. This year's event focused on navigating the year of uncertainty that lies ahead. With a world remade by wars in Europe and the Middle East, central bank and economic divergence, and consequential elections affecting half of the world's population, we looked beyond the headlines, putting a spotlight on the Gulf region and how it is deploying wealth to enhance global influence, diversify economies, and gain international prominence. Let's begin with geopolitics and the war between Israel and Hamas, what it means for the global economy, and how the Gulf region is responding to a war in their backyard. Bloomberg's Francine Lacroix spoke with Qatar Prime Minister, His Excellency Sheikh Mohammed bin Abdulrahman Al Thani, about that and more.
Right now, everyone is focused on the current mediation. Everyone is focused on how to get to a result to end the war and to get the hostages back.
So on the rebuilding, under what circumstances would Qatar contribute to the rebuilding of Gaza?
This is actually, it's still a premature question because no one is talking about the day after from our perspective in a realistic manner. There are multiple views you are hearing here and there. We believe in one Palestinian government that should be in charge of West Bank and Gaza. And this Palestinian government should be built on consensus between the Palestinians and to lead the transition of the country. Whether this will be allowed by the Israelis, and we have seen the statements by the Israeli government that they don't want the PA even to be there. And I think that if we will end the war in a state where the country is destroyed, no vision for it, no vision for the PA to go in, it will be very difficult not only for Qatar but for the rest of the world to step in and to invest in unknown. That will remain a challenge. So we always encourage, and we are working together with our Arab partner, what we call it the Committee of 6 Arabs, and the US, in order to try to think about what's the best way to transition to the day after in a way that will not actually affect the Palestinian people, will not affect the Palestinian cause, and will not undermine the Palestinian Authority.
Israel, the situation they face is more difficult than Fallujah, Ramadi, and Bakuba all put together because of the 350 miles of subterranean infrastructure that they have. It makes it very, very difficult because of the density of the population, the high rises, not small buildings, and so on. But the principle is still the same. You have to clear and hold and keep the enemy out of the people. And I do believe, by the way, that Hamas is the equivalent of the Islamic State. This is an irreconcilable extremist group that I believe does need to be destroyed. But how you do that matters a great deal. And I would welcome seeing a commitment that we are going to make your lives better, civilians in Gaza. The way we're going to do that is we're going to clear the enemy out of your neighborhoods. We're then going to seal off those neighborhoods and give you biometric ID cards. We're going to flood them full of humanitarian assistance. We're going to restore basic services, and we're going to aggressively rebuild all the damage that has been done in the course of this particular war.
What role do you see Malaysia playing in Gaza post-war?
We are a small country, relatively struggling to survive as an emerging economy. That's why I maintain excellent relations with Qatar and Saudi Arabia, UAE, Turkey, and get their sense what needs to be done. Of course, it's our duty then to do whatever is necessary, given the limited whatever capacity that we have, but we will. And I think for Malaysia in a distant land, we do subscribe to the thinking and the views of most of the Arab neighbors. That's why even the OIC, normally we do consult them first to get their understanding, then we support the position.
Prime Minister, we're running out of time. It's always too short when we have a conversation together. Just one final question. I mean, global leaders nowadays are grappling with a lot of challenges and uncertainties. What's the biggest challenge for you?
Well, I think insanity. Because sometimes you have policies that is totally absurd. I think what we need to do, right, other than focusing on the economy and development, is to bring back some humanity, compassion, and human dignity. That, to my mind, is quite lacking. That's why in the Madani framework, I put the economic policy, something about sustainability. But I do consider the issue of values and compassion.
When I look at the total value of the giga projects that Saudi have in the pipeline, I've seen estimates ranging from $850 billion to $1.5 trillion. These are very big numbers. And the question people always ask is, can Saudi actually deliver on those plans if the oil price drops? What happens if the price of oil drops?
I think that the whole idea of Vision 2030 is actually to respond to this question. We have been actually very conservative in our assumptions when it comes to our oil revenues. I'll give you just one basic example. In the year 23, we closed the year 23 with oil revenues that are more than what we have projected in the budget at the beginning of 23, despite the fact that prices were down by about 20% and oil production was down by 17%, which basically tells you that we are not optimists when it comes to projecting and therefore committing our spend to what the revenue is. We are very conservative. So I'm quite comfortable for two reasons. One is we diversified our revenues. As I said, now 37 are coming from non-oil. And we are very conservative in our projections and therefore our plans on how the oil revenue will cover that expenditure.
And Johnson, where are you finding the deal? So how do you want to grow, Franklin Templeton?
Well, first of all, you asked the question earlier about is it a good time to invest in the market and what is His Excellency doing with his cash? And John Templeton said the best time to be in the market is when you have money. So, and it's because you can find opportunities in anything. So whether it's AI, and I agree with you, I mean, I think the initial AI types of things are picks and shovels, right? It's the chip makers, it's the Microsofts, who are running cloud computing. But the next phase is going to be as companies, and they'll start to differentiate within their own businesses, those who are actually using it to a competitive advantage. And it's hard to see that today, and it takes a while to do that. But I think based on the trends, it's always easier to swim with the current, right? So if your trends, and we talked about the Ds of deglobalization, so it's figuring out who are going to be the beneficiaries of that. In this region, I mean, one of the things that I think is so impressive, obviously, as oil stays high, and it doesn't look like there's any quick resolution to Russia and Ukraine, so it's likely to stay high. There's a mentality of multiple generations, which is something I very much appreciate, and a desire to diversify an economy. And so the various economies, and so you find investment opportunities as there's diversification. And so making sure that you're close, and part of those conversations is where you find investment opportunities.
Coming up, more from Doha, including Citadel founder Ken Griffin. This is Bloomberg. Welcome back to the Qatar Economic Forum. On day one of the forum, Bloomberg's Eric Schatzker spoke with Citadel founder Ken Griffin. The always outspoken Griffin had a lot to say about the current political climate in the U.S. and the rematch between Joe Biden and Donald Trump. Take a look.
And you have warned, Ken, of some catastrophic consequences if deficit spending isn't brought under control. What is the catalyst for an American debt crisis going to be?
So I don't know what that moment will be when there's an auction that goes awry or when the markets become dislocated. Financial markets, generally speaking, work very well until they catastrophically come off the rails. You don't necessarily get a lot of warning that there's about to be a big event. The crash of '87 is a great case study. You know, that day I woke up, I was in my dorm room trading then, and the stories of the day were about a small skirmish in the Middle East of frankly no consequence, and the health of First Lady Nancy Reagan. And yet we ended that day with the stock market down 20-some%, and a number of American financial institutions literally on life support or near death. Happened in one day. One day. There was no big story that morning that would make you think that that day might have been the end of the US capital markets as we knew them. There was no warning. And so I worry that the debt crisis may have a similar construct, that there'll simply be a day where a major auction fails, and then you see a panic start to brew in the Treasury market. And the question will be how fast will the Fed intervene? What panic will that induce? Because government intervention under duress often just creates more panic. And then do we see a flood of treasuries coming back into the market from holders around the world?
Obviously, there's a U.S. election coming up, and there's going to be, in some ways, a lot of change, possibly or not. And I think this morning, one of the interesting things that happened when the Biden administration announced the new tariff regime is that it's just putting kind of another affirmation on what will be tension between the U.S. and China. So I think as much as things are changing, there's a few things that I think you can count on probably being the same right now. In particular, they may have different approaches, but the same sense. It's very politically potent right now for both sides to talk about this issue. I thought it was interesting that the Biden administration didn't do the broad sweeping tariff approach that Trump is proposing. They really focused $18 billion of imported goods in the sectors that are most governed by the national security principles, whether it's AI, the semiconductor, steel, aluminum. And so I think the headline is, this is here to stay, and this is something that I actually see our investors and clients starting to recognize, that the US-China tension is going to remain, and they're going to have to start investing with that lens.
Now, when you talked about a new normal, and you sort of implied investors are out there, they still haven't moved enough to that idea that risk has fundamentally changed. What is the classic mistake that investors are making? In terms of asset classes or whatever, what is the thing when you sit down with an investor opposite, you may have some here, what is the classic sort of error they're making? Obviously, all your investors are brilliant, but allowing for that.
Correct, but so it kind of builds on what Dina said. I think humility and knowing that you're most likely going to be wrong about these big things, because I agree with everything Dina said. I mean, the world, we were globalizing, people optimize for supply chain. How can I cut 1% off of the, now people are talking about resiliency. Now people are talking about onshoring. People talk about, hey, how could I defend myself against, and we have this tendency to look at things like, by the way, AI could be a force in the other direction where scale matters and can actually bring people together. We tend to look at these things and think that we have a clue about how they're going to play out. And if any of you or any of us look back 10 years and say, how close were we? We were pretty far. Yeah. You look at the decade before that, how close were we? We were pretty far.
Christian, is there any value left in AI?
This is a great question. I think the big speculation these days is, for the companies that are doing AI, like OpenAI, how do you value those companies? There's so much future potential, but we don't yet know what the future will look like. So that is extremely complicated, actually. But I feel that this is history repeating itself a bit. If you think back to when Google was a tiny company, and it went public at a wild valuation, everybody thought, it felt like the same. Who would have known that was a multi-trillion-dollar company today? So if I look away from the valuation question, I think there's no doubt that AI is changing the world of business, the society in many ways, and that there are lots of other angles into investing into the AI space without having to deal with that particular question.
So let's talk about that. How do you play AI without playing AI?
Yeah. So across EQT, we have venture capital and private equity, infrastructure, et cetera. And we do, on the ventures and growth side, we're investing in called the tools and the shovels. Software that's serving AI, hardware that's serving AI, companies that are using apps that are using AI, and all kinds of different features around that network. And in infrastructure, we're going a totally different path. Of course, there we're part of digitizing society. So there it's fiber broadband, it's data centers, towers, et cetera, because the need for data is massively increasing. So there are a lot of other areas of investment that support this whole AI wave that's out there.
Coming up, more from the Qatar Economic Forum, including Todd Boehly, Eldridge Industries CEO, on the future of investing in sports. This is Bloomberg. Welcome back to Doha and the Qatar Economic Forum, powered by Bloomberg. I'm Jumana Bersachi. With ownership stakes in Chelsea, the Los Angeles Dodgers, and Lakers, alongside owning the sports betting company DraftKings, Todd Boehly is redefining what it means to be an investor in sports. He spoke with Bloomberg's Jason Kelly about the future opportunities in sports ownership.
When people talk about spending, I mean, the way I think about it is we're investing, and when we have, a collection of players, and really those players continue to hold their value. Right. So it's not as if we're, kind of writing off the money, the investment. Right. So, what we're thinking about is what does it really cost to finance that portfolio of players? Right. So, because of course, some players will go up in value and some players will go down in value, but I would argue that, the investments that we've made, have continued to, as a balance, continue to hold their value. And really, therefore, we're not spending the money, we're investing the money. And really, we're just thinking about the cost to carry. What's it cost to carry that portfolio of players that are obviously so valuable?
What happens next with media as it relates to sports and the value of sports?
So, right, if you think about how you break apart the value of a club or a team, right, you have everything that goes on site, right? You've got the tickets, the merch, the hospitality, the food and beverage, the sponsorship inside of the actual facility. And then, the media value is the glow, right, that comes out of the facility, whether it's an arena or a stadium or whatever it is. And then you think about, okay, well, how do I expand and extend that glow, right? And I think obviously, the thing that really is driving these is that there's now trillion-dollar balance sheets or trillion-dollar market value companies that have gotten involved, right? So it used to be you would have kind of the broadcasters thinking about it. Now you've got Amazon, Google, Apple that are all playing in the game, and you look at them, and together they're probably worth, I don't know, $6 trillion or something, $5 trillion.
And not to mention Netflix, who's probably around the hoop.
Yeah, and Netflix is, it's a big company. But compared to those guys, it's really not so big. Right. But it's, I think, probably a $300 billion market cap. Right. And now they're throwing their hat in the ring, because they understand, that people want to watch this stuff. And, there's very few things that people will adjust their calendar for, right? So, and sports are probably it.
I think we mustn't be complacent. I think as rights owners, live sport is the most valuable asset, but we've got to make sure we deliver great entertainment. And so I think, as I know from my own personal experience, we try to do everything we can when we get a live game to make sure that we create as much artistry and magic around those games. And whether you're in any different things, the competition for those live rights is going to increase. So I think that the more innovative we can get, then the rights will continue to increase. But I think we have to understand how we're going to deliver those rights in the next 10 years. What's the Premier League going to look like? For instance, we've just finished an international round. We've got other leagues going through their broadcasting rights. And there's going to be a massive step change from the way we deliver and consume rights traditionally now, and how we're going to do that in the next 6-7 years. And that might take a dip in valuation over a period once we get the infrastructure in place to make sure we can deliver a kind of direct-to-consumer model. And at some point that will happen. And but I think what we understand, and what I loved about what everybody said today, it's the excitement of sport, and live sport is unique, and we got to make sure that we deliver it correctly.
When we talk about celebratory, the Olympics is a global celebratory event for many people. I mean, do you think Qatar could potentially host the Olympics one year?
Can we? Absolutely, I think we can. Would we? I'll leave that to other people who are more, the officials who are considering this matter. But I think, if I'm not mistaken, we've expressed our interest in this matter in terms of hosting the Olympics. But I think it's not just limited to major sporting events. I mean, I think what we're looking at today is expanding beyond major sporting events, and how do we create the events industry, if you will, to kind of support the tourism in terms of attracting tourists from outside to within. But at the same time, it's also how do we build on the operational knowledge and the know-how that we had from the World Cup.
Our numbers continue to grow when it comes to passengers, when it comes to other airlines operating in Hamad Airport. We continue. Last year, we closed at an increase of 30% in the number of passengers. This year, so far, from the numbers I saw, for example, this morning, from 1st January till yesterday, we see 27% increase in the number of passengers. The load factor is the highest in any major airline. We see our flights, for example, to the US, it's 95-96% load factor. Our flights to Australia, to India, basically all our network, our load factor is averaging between 85 to 88%, which is very high, which proves that the people want to travel, want to fly.
Does that indicate then there's been no impact, no real significant impact?
No.
To the
From what we see, no.
What about you, Ivan?
We haven't seen an impact, very similar to what Qatar is experiencing. We are seeing very high demand. Very little difference between our peak season and slack season. Demand has really grown. There's the strong desire for people to travel. So it really hasn't impacted us. We do have a lot of geopolitical issues as well within the African continent, and even with that, demand still remains strong.
That's all from the Qatar Economic Forum. Complete interviews from the forum are available at Bloomberg.com and the Bloomberg Terminal. I'm Jumana Bersecci. This is Bloomberg.